Alright guys, welcome back to the channel. Following on from my video about a week ago when I placed my next Bitcoin trade and I showed you guys exactly how to get in. I got in, we placed around 25 grand minus fees into Bitcoin, and it's been about a week since that video, and of course it's now up around £6,500, and all over the place, all over social media, I've seen people going crazy and asking me how to get in, and is it good to put all of their investments in there, and should they get a credit card loan and put all this? And I just want to say, hold up. In this video, I want to share with you how you can generate huge sums of money in a very short period of time through speculations like this. But I'm going to give you the necessary steps and things to be cautious of and the precautions you need to take so that you have the highest probability of success. So let's get stuck in. All right, so as I said, there's been lots of influencers all over social media promoting Bitcoin because of the recent rally. And of course, there's lots of greed in the markets right now. And if you want some insights on how greed affects the market, then you can go and watch my last video that I did on the Lex crash, where I share with you all of my insights, when it's likely to happen, how it's likely to happen, and more importantly, how you can take advantage of it. But all these influencers, particularly one guy I saw who was getting money from his followers to then plow everything into a new cryptocurrency, and he put his entire life savings into the cryptocurrency, and he was announcing that in his social media, which I think is extremely irresponsible, particularly if you've got 300,000 viewers and subscribers and followers. It's absolutely insane. Although, yes, we have earned £1,000 per day on Bitcoin, I want to share with you exactly how you can do the same, but more importantly, how you can keep hold of the money and have success doing this over and over and over again. And it all comes down to how you manage your investment portfolio. So I'm going to give you a bit of an overview. So you've heard me talk a little bit before about earning your right to risk. Putting money into something like Bitcoin is a high speculation at this point. You have to understand that anything that you put your money into that is one asset class is a speculation, whether you like it or not. And if you want success in investing and trading and generating accelerated wealth, you need to think about building a sustainable model from day one. Now, you may be familiar with this diagram here. You've probably seen this pyramid a lot across my social media platforms. And the reason I use a pyramid or a triangle is because it's the strongest structure known to man. The ancient pyramids are still standing today and in pretty good condition because they are built with solid foundations and they're built in a pyramid structure. So let me show you how cryptocurrency and investing in Bitcoin fits into this whole structure. If you're familiar with any of my work, you'll know that the first thing I always tell people to do is build up a cash savings. And you want to build up a cash savings that's going to form the foundation of your liquidity system. And then the next thing you want to do is start putting money to work so that the money grows and you outdo inflation, and that comes in the form of investing in the markets. Now, there's levels to which you earn your right to risk and earn your right to acceleration, even in the savings. And I'm going to go through that in a bit more detail in just a moment. I'm going to give you step by step on how you could do this. But the next section is investing, right? So this is going to be investing. And by the way, putting your money into a crypto is not investing. Putting your money into one property is not investing. Putting your money into one piece of art is not investing. Whenever you're buying one thing, that is a pure speculation and that is not an investment. True investing is investing in a set of assets that are diversified. If you're sticking all your money into Bitcoin, that is not an investment. You're literally playing red or black. You're literally playing red or black if you don't know what you're doing. And then finally, up here is the speculation. Now, why is this important? Well, let me explain, because down here, you're going to have the lowest returns, okay? And up here, you're going to have the highest returns if you're able to consistently generate returns from speculation and skilled trading. And in the middle, you're going to have the medium returns. Now, depending on how you allocate all of your liquidity through this pyramid, which wants to be bottom heavy, you're going to notice that every now and then you're going to have to rebalance this thing, because the returns up here are going to be higher and more accelerated than returns down here. So let's just say that you've got 80% of your liquidity down here and you've got 20% in speculation. Now let's just say that, just to keep the numbers simple here, and I'm going to go in a bit more detail in just a moment, but let's just say that this equates to 80k and this equates to 20k, and you've got 100 grand in your entire liquidity system, in your investment portfolio. Well, let's just say down in this half, this bottom half of your investing, you've got some passive funds, and then you might have some large cap stocks, and then you might have a business, right? And all of those will generate a higher return. So you might be getting 8 to 10% here, you might get 20% here, you might get 25 to 30% here. Now down in your pure cash savings, down here you might have some money in a current account, which does 1% per year. And up here you might have some money in a high interest account that does 2% per year. But the point is, at the bottom of the pyramid, you're going to have lower returns, lower risk, but it's going to take you less time, less skill, less effort. And at the top, you're going to have the highest returns. So in speculation, you might have that split up into three, and you might have property, you might have Forex, and you might have crypto. Or maybe you have like startup businesses. But essentially, this is the punt. This is more of the punt. And by the time you allocate this capital, it should be capital that you can afford to lose. And up here, you might be getting 30, 40, 50% per year, year on year. So as you can start to see here, let's just say that you had 80 grand down in the lower half of your pyramid, and you had 20 grand in crypto, okay? And that was your speculation. You put 20 grand into crypto, which is 20% of your whole liquidity, which I wouldn't recommend. But let's just go with that for this example, and let's just say that crypto has grown now, as it has, and you've done £7,000 in a week. Now what that means in this example, you could have had a 30 to 35% return in a week. And whilst down here, you might have had a 5% return in a week if we've had the same bull market, which means that on the 80,000 will now be worth 84k, but on the 20,000, you've now got 27k. So you've got a 4k return down here and a 7k return up here. And of course, if you leave that where it is, the accelerated returns are going to make your pyramid. You're going to have the liquidity filling up nice and slowly and sustainably here, but this is going to fill up so quick, it's going to make your pyramid top heavy. You're going to end up with a pyramid like this, where you've got most of your capital in the top half of your pyramid. Now, if you've ever tried to build a pyramid upside down, you'll know how that ends. So what we want to do is to constantly review our entire liquidity system, and when it becomes out of balance, we want to then take the liquidity in this section here, and we want to evenly distribute it across our entire portfolio to maintain a balance, to make sure it's bottom heavy, and to make sure that we can continue to play and have chips on the table without getting wiped out. So just to nail this in, I want you to look at this diagram, and I want you to think in your mind, when you're building wealth, of having ever higher degrees of risk and earning those degrees of risk. And I want you to think of doing that by allocating certain portions of that in measurements of lifestyle costs or living costs. So on this bottom rung here, you might just have pure cash, and you might save up 3 months of living expenses in pure cash in a current account or a savings account, a safe savings account that you can access anytime to enable you to relieve your animal brain. The next step, you might have a high interest account where you're putting some more money, maybe a month's or 2 months or 3 months living expenses in a high interest account. And once you've got to 3 months living expenses in there, then you might start investing in passive funds, a diversified portfolio via an index fund, which is very, very passive. It doesn't take much of your time at all. In fact, it doesn't take any of your time once you've set it up. And you have regular automatic transfers into the fund, which will generate a 7.5 to 10% return per year for you. And because you've got the cash in the high interest account and the current account, you're able to now start putting money into the market without being so fearful. But you haven't thrown it into Bitcoin just yet. The next thing you might do is put some money into a less diversified fund or a specific sector like a real estate investment trust. Or you might throw in some ETFs or some bonds to Start accelerating the returns ever so slowly and steadily so that you can handle the fluctuations in the volatility. Once you've got 3 to 6 months living expenses in there, and across the whole portfolio, you've now probably got a year's living expenses, you might then consider putting some money into some large cap stocks. And you might buy some of the best performing stocks, and you take a small portion of your surplus cash and put it into a high performing, undervalued, large cap stock. Then you might go to medium cap stocks, then you might go to smaller cap stocks. You might even go to put some money into your own business and invest in your business. Each of these will generate a slightly higher return until you finally get to the stage where you may consider putting some of your allocation of your money, of your liquidity to work in speculations, where you're going to get the highest return, but it's the highest risk, it requires the highest skill, and you're going to have to actually know what you're doing if you want to generate consistent returns. And again, there's ever higher degrees of risk in speculation too, until the point where you can literally allocate a portion of your entire liquidity to a punt, where at that point, the punt, it really doesn't matter if you lose it. It's money that you assume is gone, knowing full well that because you've built your wealth liquidity system in such a way, and you've built your investment portfolio in such a way that it's so robust that you can swing at these things every now and then, and if you connect on one of them, you can earn tremendous amount of money. But the most important thing is you won't be emotional, because you've got most of your liquidity down this half while speculating with the minority. And then once you do that rebalancing, that liquidity rebalancing at regular intervals, you can ensure that you keep a sustainable and solid wealth liquidity system and investment portfolio and build wealth. So if this has resonated with you or opened your eyes at all and made you think about things in a way that you never really thought about before, or you've never heard anyone explain things like this before, I highly recommend you check out my podcast from episode 1, but also get into my Facebook group. There's quite a large waiting list, but we are profiling people that we think are right for the group, and we're letting them in on that priority basis. But let me know what you thought of this video. Let me know in the comments how you go about managing your portfolio and your investment account, because I love reading all the comments down there. And finally, please give this video a like and share it around so that we can trigger the algorithm to get this out to many more people who need to hear it. I appreciate you watching. Take care, and I'll see you in the next one.